Hello gringos, we are back. So yesterday we stopped we were talking we stopped. Jesus Christ. The price was around here, okay, yesterday when we were analyzing the chart, and I said that it's gonna go up and probably hit the 200 EMA, but it did not hit the 200, although all of this is me, okay? You could have got all these 300 plus pips before it ricocheted off the 50 EMA. Now, this is what we're going to be talking about. The importance of these EMAs, the 200 EMA and the 50 EMA. You see, if you are not having these EMAs on your chart, or at least one of your charts, you're not doing it right, because you have to keep, you have to follow these important averages here. I said, let's roll back the film. Let's roll back what I said yesterday. So you see that? This is what I'm talking about. It got very far from the EMAs, the 50, the 200, and it went right back because it's like a magnet. It's they're gonna want to always keep touching the 50 and the 200. So we could see this everywhere on the charts. Bitcoin, gold, we see it in every single market. We see this. Here, it's bouncing off the 200. Bouncing off the 50 here. Coming back, breaks through, lags around the 200, and completely destroys it. Goes right through it. Let's see, let's go back. You don't believe me? Here it is. It goes right through the 200 EMA. There's too many sellers. It hits a good resistance and it bounces back to the 50 EMA. Wobbles about a bit and comes back to the 50 EMA. So these are you see, goes off. Then, like a magnet, it attracts back to the 50 EMA. So here it's just very in line, in touch, getting groovy with the 200 EMA. It's not even leaving because it's like a magnet. Let's see. Here goes away from the 200 EMA. Boom. Hits it. And then breaks through. Here it's just bouncing off the 50 EMA until it doesn't and it breaks through. Oops. Let's see again here. Boom. Hits off the 50 EMA. We could go through like any chart here. We could go, let's look at gold here. Does the same apply? I'm sure you guys know this, but just to prove a point here. Look at this. It's it's bouncing off. Boom, bounces off. Almost touches it, bounces off. Here. You guys, if you don't have the EMA, for all the beginners out there, you need to put a 200 EMA exponential moving average and a 50 exponential moving average. It will help you drastically. Whenever there's a breakthrough, usually it breaks the fuck through the 200 EMA. So we see this time and time again. Let's look at GJ. See if you see this? Boom. Okay, this looked like it's a false breakthrough. It looked like it broke through, but you know, it went right back. Here, continues, gets away from the 200 EMA, boom, hits it, gets away from the 200, boom, hits it again, bounces off of it, and then bounces off the 50, and boom, plummets down, plummeting down. You see, so what's gonna happen? It's probably gonna go back to this 50 EMA. Here, look at this huge bull candle, absolutely ginormous. And where does it hit? It hits the 50 EMA perfectly. So time and time again we see this shit here, boom, hitting off of it, almost, boom. Let's see, let's check another market. Let's go New Zealand USD, some different pairs. Clearly, let's go like a magnet. It's going closer to the 200, bounces way off of it, goes right, well, not right, yeah, goes right back. It goes right back to the 200 EMA, goes away, boom. Here it's just absolute bouncing off the 50, bouncing. So you could just, you know, it's pretty safe in a bear trend. When it gets close to the 50 EMA, as soon as you have some confirmation candles, you just, you know, you take a position, a short position. Let's see this again. Here, boom, bounces off, goes closer like a magnet, now breaks through. Well, it broke through here, but then it bounces off here, goes back to the 200, and boom. You guys need these indicators, you know. At least maybe you don't need them on the charts you trade on, but to, you know, to grasp the momentum, to see where the hell you're at, you should check out some charts with these moving averages. You need to. I don't understand how people do. I mean, I do understand people could trade without indicators, sure, but those people are gods, you know, or they see the future or something. Here, bounces off. Okay, screw this one. Let's just go a nice pair like Euro CAD. Is it the same case? It is. It is. It's not really the best example, but you get the point. These are strong levels, and on each time frame, you should keep checking the 200 EMA here. Breaks through. Okay, it doesn't go there, you know, to the EMA, but a lot of times it won't, you know. Doesn't it's not a law that it abides by every single time, but you know, here, boom, smacks off, goes back, smacks off, goes back. Pretty, you know, pretty standard procedure here. Let's check Canadian Chef. Here, magnetized, it's touching. Let's look at this beautiful. Goes away from the 50, hits off the 50, stays over the 50, bounces off, then breaks through. Goes down and then touches the 50 EMA, bounces down off of it, and then stays. Even on the day chart, you know, this is on every single time frame. This shit will keep on happening, obviously, because it makes total sense that it's gonna be hitting the average at some point. These, like, you know, they're very good indicators. You know, you just need to use them. Here goes away, boom. If you were to be looking at this day chart, whenever this price was you know, was about here, what are the chances it's gonna hit and like break through? There are chances, of course, but seeing as it's, you know, it was already pretty high up, you know, pretty high up. It bounces out after these candles here. You could have swore that a freaking short position after like these, this is a bear candle, it's just colored, you know, it's a Renko indicator. After these 3 candles, maybe 4, even this 5-1, you could have definitely freaking sold, you know, you could have definitely sold, got yourself this huge momentum, this huge trend, pretty big trend, lots of pips. So that's the importance of these moving averages. I'm sure you guys know this is just for the beginners out there, you know, all you freaking professionals. Calm your horses, we're gonna get to the juicy stuff soon. Don't worry, I'm gonna show you how to I'm gonna instruct you guys how to trade correctly and how to trade with the odds on your side, you know. Boom, breaks through, it's hitting off, boom, hits off the 200, goes back, hits off the 200. Now that was like a false breakthrough, breakout, and it goes up, bounces off, and it's just bouncing off this 50 EMA. You know, pretty standard stuff. Let's check out the 30-minute. Bounces off, very standard. It's the same thing practically. Bitcoin does the same thing. Oh, we did Bitcoin. Well, they all do this. No, so just so you know, they all do this. Very standard stuff. All right, fam. I think you guys understand that the 200, the 50, you know, they're good. Even other ones, you know, there's like the 176 people use, the professionals use. You know, they do their own stuff, but they're gonna hit these EMAs. They're gonna be very tightly, like, in love, connected, you know. It's like a magnet, these EMAs. Usually they're gonna, you see this, okay, this one didn't, this one almost hit it, this one bouncing off the 50. Bounces off the 200 here, hits the 200, bounces off. Look at this, it's just, it's clear as day here. Alright, fam, that's pretty much it. Peace out, y'all.